Hey guys, what's happening? It's Electric Aid Stock here with another video. Today I'm going to be talking to you about the massive earnings day we have coming up on Wednesday the 27th, where Apple, Tesla, Boeing, and At&T and Facebook are among the 150 companies reporting. Today I'll tell you what the earnings expected are for these four companies, along with current news around the stock and what I think will happen regarding the earnings and how to play it to maximize your earnings. But before I get into that, please like, comment, subscribe so I can keep growing my channel. The first company releasing its earnings on Wednesday I will be discussing is Tesla, the company that had the greatest performance in all of 2020. There's not much left to be said about Tesla after their amazing 2020, which saw short sellers of the stock lose more than all airlines combined in 2020 alone, even with the pandemic shutdowns. The stock is up over 700% in the last year alone and an astonishing 75% just since their August 25th stock split. The company currently has a market cap of over 800 billion, more than the 10 largest automakers combined. In trading Monday, it was up almost $45 or 4%. Tesla has beaten earnings every previous quarter in 2020, and this is their second consecutive quarter with a profit expected. They are currently expected to report $1 per share, which is almost double their quarter 3 estimate of 58 cents, which they easily beat when they reported 53 cents per share. I believe Tesla will continue their trend of exponential growth and blow by this expectation just as they have for every other one this calendar year, including Elon's personal goal of 500,000 units delivered, which they narrowly missed, but was called unrealistic at the time. With this growth in mind, it would be ignorant to think they wouldn't continue their growth in sales and revenue as they ramp up production, improve the self-driving capabilities, and move into more markets, including China, where they announced plans to release a $500,000 car, which would have a tremendous demand from the public in China. That being said, I still consider Tesla a large buy due to their earnings being released and expect them to rise rapidly upon the earnings being released and positive news being of it. Now let's discuss Apple, who also report their earnings Wednesday the 27th. However, this report is for Apple's first quarter of 2021, while all other companies I discussed today will release their fourth quarter of 2020 financials. Many analysts see the performance of unproven tech-based stocks with tremendous upside such as Tesla, Snowflake, Fiverr, and Zoom to name a few, and think this is a story for all tech stocks in the current market. While I agree that there are many stocks in this market overvalued, I disagree with this assertion. While the price for many companies who investors think play a big role in the future has risen exponentially in this post-crash market, I believe the tried and true blue chip tech stocks, the FANG stocks as they're commonly referred to, will are tremendously undervalued in this post-COVID market of increasing valuations. FANG is an acronym referring to tech giants Facebook, Amazon, Apple, Netflix, and Google. In a post-COVID market that has seen many stocks rise by hundreds of percent, Apple, the world's largest company with a tremendous upside, has only risen 50% in the trailing 12 months, even with announcing plans to release a electric vehicle by 2024. The quarantine has also done wonders for Apple's business. The quarantine left people with more time to be on their devices, and the increases in revenue show that this likely had a large positive impact on the sales. Apple is expected to earn $1.39 per share off 102.61 billion in revenue, which many insiders expect the company to beat, with it reporting $1.52 per share being the whispered number on Wall Street. Due to the expectation to beat earnings and the current undervaluation in this overvaluated market, I recommend to buy Apple in this and expect them to rise rapidly. I predict to see Apple by $200 by the end of this year. The second FANG stock and third stock in total that I will be discussing to be releasing their earnings on Wednesday the 27th is Facebook. Facebook is expected to earn $3.21 per share, or $26.4 billion in revenue. For Facebook, the same assertion made for Apple could be made here. While 2020 saw many unproven stocks skyrocket based on anticipation of profitability in the future, blue chip tech stocks were ignored by investors, leaving Facebook relatively undervalued in the inflated market. Facebook is up only 26% in the trailing 12 months, underperforming the Nasdaq indice. Many expect Facebook to continue to grow its revenue as they continue to modify their platforms to be more accommodating to businesses and advertisements. Additionally, I believe antitrust fears of investors are overblown. I do not see a reason for the current status quo to change, of Facebook and its executives consistently going in front of Congress and lying and facing no repercussion from lawmakers. I expect Facebook to beat expectations. Additionally, I recommend buying Facebook. The price is currently low due to fears of government regulations, which will never happen. The fourth stock to announce their earnings on Wednesday is aircraft giant Boeing. Boeing had a tough 2020, which saw a complete shutdown of the airline industry following the coronavirus shutdown and pandemic, as well as their newest aircraft, the Boeing 737 MAX, being grounded in many countries, including the United States and Europe, following 2 crashes in 2018. However, this grounding was recently lifted, a decision met with criticism by critics. The lockdown has been incredibly hard on Boeing. In Q3 2020, they only delivered 238 aircrafts, compared to 225 from their largest competitor, Airbus, who, despite being Boeing's most major competitor, is a much smaller business relatively. Boeing is expected to lose $1.69 per share, a figure many analysts expect to be even greater upon release of the reports. Boeing has missed every expectation for 2020. So to do the same in Q4 would be no surprise. They're currently trading at over a 40% discount of their pre-corona highs of over $350 per share. While I don't expect Boeing to go anywhere, and a long-term hold of the company would be wise, as they will inevitably return back to their previous highs, I advise against buying Boeing in expectation of getting a profit upon release of their earnings, as I only see them dipping back further into their dip upon release of a terrible earnings report. The final stock of the over 150 stocks reporting Wednesday that I will be discussing is At&T. At&T, although they have been trading sideways for the better part of a decade, the high dividend yield still makes this an attractive stock for investors. At&T is expected to earn 73 cents per share, a 3% decrease from last quarter, which they met. I believe At&T is trading at a discount, and as their many revenue streams continue to solidify, and as they increase their revenues from 5G, more money will start to come in, making At&T a much more profitable and attractive company for investors. Thank you. If you stayed to the end, I appreciate it. I hope you learned something. Please help me grow my business. Drop a like, a subscribe would help a lot. Thank you.